Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now, if you like our content, please don't forget to hit the like button. Also, subscribe to our channel and click on the bell button to receive important financial updates at the earliest. Now, today we would be presenting to you 5 small cap stocks which are undergoing capex and which have the potential to become future multibaggers. Now, for those of you who do not know capital expenditure, now it is basically the money a company spends to buy, maintain or improve its fixed assets such as buildings, vehicles, equipment or land. It is considered a capital expenditure when the asset is newly purchased or when the company uses the money towards extending the useful life of an existing asset. Also friends, this is not our own research. This article was published on moneycontrol.com and is by Madhu Chanda Roy, and that is a link which we'll be providing in the description of this video. Also friends, please don't just go ahead and blindly jump in. Wait for the volatility in the market to subside, and it's only then that you should be going ahead and evaluating these investments. Please go ahead and do your own research and watch this video to know more about these stocks. Now the first stock on the list is Bharat Bijli Limited, and Bharat Bijli Limited is currently trading at 1286.90. The code for the company is BBL. Now Bharat Bijli Limited offers electric motors and transformers. The company's segments are power systems and industrial systems. The company focuses on the electrical engineering industry in India. Now if you were to look at the 1-year chart, you would see that the company was on an uptrend during the initial part of the year. Since then it fell rapidly, but of late it has again grown as far as the price movement is concerned. As far as its chart is concerned, it looks as if it's in the process of forming a rounding bottom formation. Now the market cap of the company is 727.30 crores, which means that the company is a small cap one. The EPS is 39.62, which translates into a price to earnings ratio of 32.48. Now this is much more expensive compared to the industry PE of 17.24. The book value is 516.94, which translates into a price to book ratio of 2.49. Now the company does not currently pay out any dividends and the dividend yield is hence 0. The promoter holding is a bit on the lower side at 33.84. The 52-week high is 1577.20, whereas the 52-week low is 804.20. Now moneycontrol.com's Madhu Chanda Roy thinks that electric motors and transformers maker Bharat Bijli has seen a substantial improvement in performance, although valuation has partially captured the turnaround. Going forward, the numbers should reflect the nascent revival in industrial capex, and hence the company is expected to go ahead and do well going forward. Now the second company on the list is Everest Industries Limited, and as far as Everest Industries Limited is concerned, it is currently trading at 532.10. Now the code for the company is EVERESTIND. Now Everest Industries Limited is engaged in manufacturing and trading of building products such as roofing products, boards and panels, other building products and accessories, and manufacturing and erection of pre-engineered steel buildings and related accessories. The company's segments include building products and steel buildings. Now if you were to look at the 1-year chart, you would see that the company has been on a consistent uptrend throughout the year, and it's only recently that there has been some sort of a dip. It also has a lot of marquee investors, and they include people like Vijay Kedia, who is very bullish on this stock and has highlighted this stock as his Diwali pick as well as the New Year pick for 2018. The market cap of the company is 827.53 crores, which means that the company is still a small cap one. The EPS is 28.91, which translates into a price to earnings ratio of 18.41, which is much cheaper compared to the industry PE of 34.76. The book value is 225.35, which translates into a price to book ratio of 2.36, which again is decent. The debt to equity is 0.7367, whereas the return on equity is 0.0309. The dividend yield here is on the lower side at 0.19 and the promoter holding here is average at 48.66. The 52-week high for the company stands at 637.95, whereas the 52-week low for the company is at 182.15. Now, according to Madhuchanda, Everest Industries Limited, while known for its roofing solutions, has now stepped up efforts to increase contribution from its other two segments, namely boards and panels and steel buildings. Now, by FY20, close to 65% of the company's profitability should come from newer building products and pre-engineered steel buildings. The strong brand recall, diversified product range and distribution network puts it in a vantage position. The change in its product mix going forward should support margin and the company should hence do well going forward. Now, the third company on the list is Ion Exchange India Limited, which is currently available at 523.60. The code for the company is IONEXCHANG. Now, Ion Exchange India Limited is engaged in water and environment management business. The company offers products including ion exchange resins, water treatment plants and chemical additives. The company's segments are engineering, chemicals and consumer products. It focuses on industrial water and also wastewater treatment. Now, if you were to look at the 1 year chart, you would see again the stock rose very rapidly during the initial part of the year, since then had a dip and again had started moving, but of late in the savage market correction which is underway, this company has again lost some ground. The market cap of the company is 767.95 crores, which translates into a market capitalization which is a small cap one. The EPS is 34.30, which translates into a cheap price to earnings ratio of 15.27, which is much below the industry PE of 35.89. The book value is 201.69, whereas the price to earnings ratio is 2.60. Now, both the price to earnings ratio and price to book ratio are relatively on the cheaper side. The dividend yield is 0.67, which is a bit on the lower side, and the promoter holding here is also average at 44.04. The 52-week high is 638 and the 52-week low is 305. Now, the reasoning behind going ahead and choosing this stock is Ion Exchange offers a wide range of solutions across the water cycle, from pre-treatment to process water treatment, wastewater treatment, recycling, zero liquid discharge, sewage treatment, packaged drinking water, seawater desalination, etc. The company is also engaged in manufacturing ion exchange resins, specialty chemicals for water and wastewater treatment, as well as non-water applications. The company has a healthy order book and wastewater management is expected to grow at a healthy clip as the capital expenditure on water and wastewater infrastructure is set to increase in the coming years. Ion Exchange should be a beneficiary of this trend. Now, the fourth company on the list is Celtic Energies Limited. Now, if you were to look at this stock, it's currently trading at 1631.10. The code for the company is KELENRG. Now, Celtic Energies Limited manufactures cartridge explosives, bulk emulsion explosives, monomethylamine nitrate MMAN solutions and a range of perlite products. The company's principal products/services include industrial explosives and perlite. The company operates in three segments, which include explosives, perlite and site contracts. The company's geographical segments include India and also other countries. Now, again, you would see that this company has been on a slow uptrend, but towards the middle of the year there was a huge spike, but again it consolidated, and of late there has been a rise in the stock price. The market cap of the company is 163.11 crores, which means that the company is still a small cap one. The EPS is 84.45, which translates into a cheap price to earnings ratio of 19.31, which is much below the industry PE of 68.05. The book value is 454.20, which translates into a price to book ratio of 3.59. The dividend yield is 0.15 and is low, and the promoter holding here is average at 54.23. The 52-week high for the company stands at 2169, whereas the 52-week low is at 581. The revival in capex cycle, especially in areas like mining and cement, stands to benefit this entity. Now, the final company on the list is ARF India Limited, which is currently available at 475.80. The code for the company is ARFIN. Now, ARF India Limited is an India-based company engaged in manufacturing and trading of non-ferrous metals. The company's principal products is aluminium, and its product lines include aluminium wire rod, aluminium deox, cored wire, alloy products, automobile parts and cable and conductors. Now, if you were to look at the 1-year chart, you would see that the company did nothing for the initial part of the year, but since then has been on an uptrend. The market cap is 578.26 crores, which translates into a small cap market capitalization. The EPS is 15.10, which translates into a price to earnings ratio of 31.51, which is slightly more expensive compared to the industry PE of 25.71. The book value for the company is 44.34, which translates into an expensive price to book ratio of 10.73. The dividend yield for this company is on the lower side at 0.42, and the promoter holding here is a matter of comfort, and it stands at a strong figure of 72.68. The 52-week high is 580.65, whereas the 52-week low is 133.33. Now, as far as this company is concerned, this is engaged in manufacturing aluminium products, and the company forayed into the aluminium recycling and ferroalloy segment in the year 2001. Strong end market outlook imparted strength to its numbers, and domestically it caters to steel, chemical, power and conductor industries, and globally the company focuses on large steel units. Now, these are expected to do well going forward. Now friends, please don't treat any of these as stock recommendations. Please go ahead and do your own research. Also friends, the link to this article, which is the source for our video, is present in the description box below. Please surely visit it, read that to build more conviction around your decision to either buy or sell this stock. Friends, if you have been benefited by this video, please don't forget to subscribe to this channel. Also share this video so that this video reaches more people going forward. Thanks for watching, and we will see you soon with another video.